Hello and welcome to Pro Trader Strategies Market Commentary for Thursday, February the 13th. My name is Eric Wilkinson, and some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, though, we are here to teach you some different strategies that you can then implement into your portfolios, but please do that in your own way. Also, remember, past performance of any trading system or methodology is not necessarily indicative of future results. All right, having that out of the way, let's get it on with some economic data. Across the pond, we didn't get a whole lot of economic data, and it's really not in the form of their most important economic data points, in the form of CPI. We got CPI out of Great Britain across the pond. Came in at a 1.8%, pretty much in line with expectations. It was expected 1.9. It is worse than expected, but pretty much in line there. But PPI input, producer price index input, came in at a negative 0.1%, expected to be a positive 0.2%. Now, some people say that that's a bad thing. We should see price inflation with demand. We're not really seeing that, especially with all the tariffs and everything else going on. We're not really seeing a lot of this price increase that I was even expecting. So with that being said, came in at negative 0.1%, expected to be a positive 0.2%. They also revised last month's number down from a negative 0.1% to a negative 1.6%. So even more of a revision that they missed last time. They missed on the downside and revised it even further down. So a big miss on the PPI input for inflationary expectations, not going to be there. And then we got the core CPI year over year coming in line with expectations of 1.9% for Great Britain. Now we move back over here. Actually, let's talk about one more thing. Industrial production for the European region came in line, actually slightly lower than expected at negative 0.9%, expected to be a negative 0.4%. Now let's move back here to the United States. Coming with our CPI, Consumer Price Index number, came in line with expectations at 0.2%, expected to be 0.2%. That was the core CPI, sorry. The regular CPI came in at unchanged, expected to be a positive 0.1%. Just a slight miss there. Crude oil inventories, though, came in at a 3.6 million barrel build, expected to be a 2.1 million barrel build. No revisions the last month, which was also a build, if you remember. So a lot of oil out there. We continue to see these builds increasing. We would think that some of this oil inventory would start coming off if the economy was really firing on all cylinders. We're not really seeing that. So we should actually start seeing crude oil continue to move to the downside. Not the case today. They're taking this opportunity with this glut of oil. You know, a lot of supply, less demand, prices go down. We're seeing prices go up by about $1 here, but I don't expect to see a major move. This is a knee-jerk reaction, maybe to push out the shorts or something like that. But at the end of the day, oil continues to build. There's no other, it cannot continue this move without seeing some demand for oil. All right, let's move on to gold futures. Gold futures pretty much unchanged. It's slightly higher on the day, but right there, stuck at this value area high as the bulls are trying to battle and the bears are really defending this Fibonacci here, and that the bulls are going to defend like no tomorrow for this 13 handle, I think. But we're going to have to see how that all works out. I'm still short the GDX in my portfolio. I haven't been able to get out of those, but I'm squeezing that for slightly better than 50% of my max profit, just by about a nickel. Because I sold it for 35 cents or something like that. I'm squeezing it out a little bit more because of those commissions and everything else. All right, bonds unchanged or slightly in negative territory, but starting to build a little bit of a bottom here. They're starting to see these economic data points come out here and across the pond, and I think they're realizing that there is no Fed increasing interest rate this year, and that's going to be basically getting bonds stuck in the mud unless we see some big moves either way in these economic data points, pretty much where we would expect, or I would expect for where we are. I think everything is kind of priced in there. All right, VIX trying to move higher a little bit today, still in the teens. That is because equities albeit our high on the day, we got a little bit of a gap here because remember the Dow Jones Industrial Average Index doesn't trade overnight. It doesn't take that into account. So we got a little bit of a gap here move and pressing on the value area high. So that's where we start to look for it to get a little overextended to the upside. 38 Fibonacci is going to act as a resistance. Now, a settlement like we have right here or anywhere below where we are currently is going to make this very toppy feeling. And I'm going to believe that it's going to roll over and follow with my assumption where we're going to kind of hang out here in and around this value area, point of control, which, you know, is starting to get a little extended. We can see some of these little volume nodes get filled in as we kind of bounce in and around this area. But I believe that we are going to settle down, lose a little bit of volatility as we do that. Again, similar situations. Charts look all the same with the Dow Jones, NASDAQ, and the E-mini S&Ps for the most part. We got NASDAQ piercing above that 38 Fibonacci extension. Found the 200-day moving average, which really acted as resistance. And it's kind of sandwiched between two really tight areas that I think are going to act as major support and resistances. So it's going to be a big battle to get out of there. A settlement below that would be below this 38 Fibonacci extension would be a huge coup for the bears, and would really expect this to roll back over to the point of control. Now the E-mini S&P is similar situation where we have the 200-day though lining up right along lines with this 38 Fibonacci, so it's really a strong support and resistance. We weren't able to get above that yesterday, really, and then today popped above that on the open and have made this little range. Again, settlement here and or anywhere below where we are right now is going to make this feel very toppy and feel like it's going to want to roll over. E-mini S&Ps on the breakdown. This is a 30-minute candle. Each blue section is a day. You can see overnight inventory kind of popped right off the open, consolidated. Really messy chart, to be quite honest, on this, but you can see we popped above here. The entire value area is above yesterday's setup, and then we're starting to lose some momentum here. Losing momentum into the end of the day is a bearish sign. I think that might be what we start seeing here for the rest of the day. All right, let's talk about a couple of things that I'm looking at. IWM, remember I'm short the 152 calls in here, so I need this market to really roll over. Hopefully what I've been talking about with this being a little bit toppy, tomorrow a bit of a correction will work out in my favor. That's what I'm looking for because these IWM short calls go off tomorrow, so they expire tomorrow. Settlement outside or below 152 would make me very happy. 152.71 is where my break even is on that, so I'm looking for that as well. But right now, holding on to that position, I don't really even have a working order at this point. TWLO is a trade that I did on the earnings trades. You can see right now we are falling out of bed, but this is one of those reasons why get out of these, especially if they're a winner on the open, because anything can happen throughout the day or even the next couple of days. We saw that with EA Sports, right? In hindsight, I shouldn't have been mechanical and gotten that aggressive and played out the probabilities, but we don't know that at the time. The way that the earnings were, to me, made it look pretty bearish that it wasn't going to recover like that. Apex Legends and the hubbub around them, all of the social media and everything else has really gotten that market moving. So completely different side story there. But anyway, earnings related nonetheless. And in TWLO, I went in here and sold the 99 calls in the February that expire tomorrow. And so the February sold the 99 puts, in there for $1.79. I was able to buy those back this morning for 14 cents. Again, on the open, it actually got a little bit better. I was working a lower bid than 10 cents. And when I started seeing this market start to correct a little bit, I got very aggressive in that first 15 to 30 minutes and bid it up to 14 cents to get out. So out of TWLO. The only other thing that I'm really kind of looking at is that IWM. All the other trades I've got on are not really doing anything. The trades I'm going to be looking at for the rest of the day, though, for earnings is going to be MGM, maybe Yelp, probably Coca-Cola. So MGM, Coca-Cola most likely, and doubt Yeti, which is coming out in the AM as well. NTAP is another one. So there's a pretty good set of earnings that I can look at, companies with earnings that I'm going to look at. MGM for sure, Coca-Cola, possibly Yelp, NTAP, and Yeti. I doubt Yeti, but I thought I'd throw it out there since it's a real popular name that we'll take a look at it anyway. So check it out on Twitter. I'll tweet out what I'm going to do. It's up to you to know my strike locations from my earnings webinars. I'm just going to say whether I sold puts, calls, strangle, whatever. But you should know the strike location based on my rules. That's it. Check out tomorrow's webinar. It is going to be on the ratio call spread. Really great strategy to set up in high implied volatility markets. I'll show you how to do that in this webinar. And if you can't take that, take it easy.